Drama, yeah? Drama. Everyone thought that the news kind of pushed the bulls back into the market. The bulls are about to take the market to the new high, blah, blah, blah. But remember, drama is what you actually get because when you are in the market, when you are looking at all of these different things, you have to understand one thing. It's the basic nature of market. The market is made for the whales. So think about this. Earlier today, the idea was, see, the war is over. It will be called as a 12-day war. Everything is over. Sailors buying this like crazy. Oh, the ceasefire is here. The war is done. But right now, things are evolving in a different perspective. Say, the last one I was watching here is this. And I was like, okay, is this just a random post, a fake news? And then someone is asking Grok, is this true? And Grok comes on saying, yeah, it is true that 23rd, they did conduct a strike. So you come back to the market and tell me, how is the market reacting? You come in and look through all of these noise. This is going to give you the basic example. Now, what do you mean? Yeah, a lot of people took the right decision at the top with the SI family. When that fake news came and boom, we decided something and we acted upon that. And as soon as I did that, you guys knew it in the SI family. Because remember, in few days from now, majority will say, shit, this is just like that XRP reserve asset tweet. You know, everyone went in, rushed in. Few with this, keeping emotions under control, they took the benefit of that. They used the liquidity to get out with the financial institutions, with the whales. Are you joining the whales or are you going to play the emotional game and get screwed? It's your decision. Welcome to the Scientific Investor family, where the normal retail guys get to learn how to smash the 90% in the market. Yeah, you become the top 10%. Now, let's actually reevaluate the situation. This is a micro chart to see all the noise which is happening right now in the market. Good? You see the price go up, it come back down, it go back up, it come back down, blah, blah, blah. Now, let's zoom a little bit further. That's a 4-hour chart. Yeah, you kind of see the exact same picture staying relevant. Yeah, not irrelevant, it's relevant as of now. Good. Now you slowly zoom out on a 12-hour. Yeah, half a day. Now what do you see here? You can plot this. This is the primary support region. This is the secondary. Now you did take support at that region. Question is, do you happen to make a hidden bullish divergence? No, you didn't. Good. Now we go on a daily chart. This is where exciting things are right now. You have two trend lines which you have to think about. One is the upper trend line, which is the resistance. From there, you plot this. This is your primary trend line. Yeah, that would somewhat look like this. Then you have a secondary trend line. This is the exact history in the recent past. Yeah. Now, this is your current secondary trend line. Are you breaching that or not? This is why I say, guys, the market will usually give you multiple options, multiple thought process. So one of the primary aspect which I usually ask you guys is like, okay, think about this. If this is to play out, how do you think the market is going to react? There are certain differences in the market. There are certain things to watch out. So when you do look at all of this, the way the ideas play out, it will look different. But you need to understand the macro picture. You need to understand the market cycle picture. And then you also have to keep in mind, you may see micro pictures as well, because the market, remember, is a voting machine on a short term, but a weighing machine on a long term. I plotted two possibilities for you guys. One hitting this region and coming down, and the next one was up here. Right now, that's playing out. So each and everything which has been posted in here is right now in front of you. And it's not just that it is in front of you, it is playing out for your advantage. Now, come back into the market. Let's put this into a different chart. Say this is Solana. You're on a daily, you're looking at this macro pattern, it's evolving, good. Now, on a micro, what really is happening? So I'm like, okay, this is a daily chart. This is showing you a formation of a possible bullish divergence, yeah? That's a possible bullish divergence coming up on a daily chart where your price is doing this. Good. Now, the moment you break out, retest and bounce, okay, you are going to see something coming back up. Fine. Now, you always know one thing. Higher time frames, they dictate the market. So you come down here, you're watching this. The market showed you a negative divergence in here. The market is trying to form a bullish divergence in here, but it's not yet confirmed. So you go on a higher time frame where you have confirmed things which matters. Now, what is confirmed in here? The negative divergence back in the day was confirmed. 1. 2. It was retested and faked out even while the RSI was trending down. You get that? Now, what's the second trend line in here? Second trend line would look something like this. So even if there is a micro pump to test the trend line, it is going to be bad for those who opt the other side. Why? Because a lot of people are missing the macro scenario. They're not looking at this. We are here on the 24th of the month, and think about this clearly. It's certain that in a week you're going to get the monthly candle close. And as of now, it does look and sound like this. So remember, if it walks like a duck, quacks like a duck, now you know what it is. Now we come on to other assets. Say this is Doge. Did it bounce? Yes, it did. What kind of a bounce was that? Have you ever seen these kind of bounces in a bear market before, or even in a large correction before? Good. You come back. Let's take this stretch of a corrective action in the market. Do you see this? I was showing you, no. All that bearish sentiment, it's about to get wiped out. Then, boom, you drop. See that? So within that part, it usually shows you that we saw somewhat something like that even in here, a doji in here. And then the market went down. Clear? You got a fake rally up here. Those who shorted this got this. Boom. They went up. Good? Now that's a 3-day chart. Maybe you won't agree. Let's go on to a weekly chart. So in here on a weekly, when you were going up, you had a fake out to the downside and then immediately you went up. Good? Now, you go to the bear market. When the bear market started, you had a market planning saying, no, see, I'm going back up. Boom, you come down. That happened in here. Now you're saying, no, I'm going back up. Then, boom, you come back down. So, are we going to do something like this? And what does that mean for you if it actually does this? It's just a bit of waiting. I mean, there is nothing new in the market saying you should take decision on. Right now, you really do not have a clear sentiment in the market arguing whether you're breaking or continuing the trend. Right now, the trend and its continuation is still valid. Say you pick up a weekly, pick up a 3-day, any chart you like, and try to stay online here. This is where you are. Yeah, great. Are you taking support? Yes, you are. On a weekly, yes, you are. So you zoom in to that. You want to see things with noise. You want to see how and where you got supported before. This is what it looks like. Now, if the moving average reject this, how would this sound like? That is the primary question. You have trend line 1 as a resistance. You have trend line 2 as a resistance. So in any of these region, if you see that the price is getting rejected back to the downside, that won't look good. 1. 2. What that would sound like is the market is forming lower highs with lower swing lows and going for another low, potentially below this point. Fine. There was a lot of questions about XRP. Let me ask you this. What changed? What changed? A lot of people are starting to argue $5, $10, different perspective. So my question is, what changed? You had a negative divergence which developed in this phase when the price was going up. RSI went down. We call the top in here. Yeah? Cool? Great. Now watch. That negative divergence still exists on a weekly chart. And the price is remaining below that trend line. So the negative divergence and its extension is valid even now. What makes you think that that move is over? The momentum shift to the downside is still relevant. You haven't even erased that 1 monthly candle to the downside. Fine. Now you come up here, you're watching this. What in the hell is happening? There's one doji here, another doji here, another doji here, another doji here. When will this be moving with momentum? The entire market, when it actually decides this is my direction, I think that is exactly when it is gonna act. So for that, you can come up into Ether, alt market, wherever you want to go, and see you had a negative divergence here, which was not the textbook negative divergence, but still the idea, the concept, that was valid. Right now you're in here, you're doing this. Think about this. 1, 2, 3. Now, when will you do the ABC? The ABC? Is it like this? Or you're just starting the A, you have the B, then you have the C. Usually C leg is very violent and it can go very lower. But the trouble is, if this structure is the macro ABC, I don't like it. Meaning the 1, you're done it. Good. The 2, which was fake out, you're done it. The 3. Now, if you're doing the A, B, C, the C is that. Now, if you're starting a new trend after that ABC, it usually shows I'm going back up and then immediately says, no, I've fooled you. That's the pattern. I'm breaking lower. Now, all of this is very confusing when you're on a short-term horizon. You literally have to be on a macro horizon to understand what's happening. Now, put this on a line chart and I think the market gives you the right perspective. This was the previous support. Extend that. Right now, it is acting as a resistance. So when a support turns into a resistance, it's something bad. When a support is breached, it's over. So right now, it's something bad. If it breaches this region of 2000, it's over. You know this more than what I am looking at, because a lot of you have seen this in 2017, have seen this in 2021, and you literally don't want to repeat that again. Now, pick up the Bitcoin dominance chart in here. Majority will not like this video because this is not about the hype. This is about reality. You're still about 65% of the Bitcoin dominance. And Bitcoin in itself is showing you the monthly can literally close as a doji or even as a red candle. So you zoom in. Okay, what is it actually showing you? This weekly candle is not yet closed. And as of now, this is your momentum. So anything in between usually is what? Fake out. Yeah. So right now you're coming in here, you're watching, okay, the next candle will close after 3 days here. It just opened today. Good. Now you go on, you're picking up a daily. Okay, the last candle was a green one. Maybe you're going to get a couple of days here in this region before you pull back down. Easy part, measure this. 1, 2, 3, 4, 5. 5 candles in green, and then that 5 candles in green actually push the price up like this, 7%. Cool. Now, 1, 2, 3, 4 candles in red. Yeah, that 4 candles in red actually push the price down like this, 5%. Fine. The next candle was 1 in green and a lot in red. So the momentum was shifting. You got that? Clear? Right now, if you are in Bitcoin and you're observing this, keep this in mind. This is where we are. The pattern and its support goes lower. Next bottom can be down here around $96,000 to $95,000. Good. The moment you get the monthly candle close, you will see where we are going. Right now, you can still stay as green on a Heikin Ashi for the month of June, but the price can still be close to 100,000, just below 100,000. That's okay. Now, you go into multiple assets. Say you want to pick up different asset. This is Popcat. The monthly itself is red. You go on a 3-day. The last candle close was in red, so your decision should not be changed. Now we go back to Solana, same. Now we go back to Ether, same. Now we go back to Bitcoin, same. The last candle close came in this direction. Good. Now what about all this volatility? What about all this news? If you do follow the market, you understand one thing clearly. There will be a lot of different arguments. But watch this. This is the most recent news. IDF confirmed Iran has launched multiple missiles targeting Israel. That just came 3 minutes back. Am I crazy? Because think about this. In approximately 6 hours from now, the war is going to be over. Okay, good. So he's literally saying you have 6 hours. Do whatever damage you want to do. The other side is not going to fight. Huh. I'm like, are you sure? Now, after Israel put that there, Iran is saying, I'm going to give it back to you. I don't want that shit. Yeah. So you kind of see how the market operates. The whales use you guys for their liquidity. Now, if you're part of the SI family and you're taking the right decisions with the SI family, you're not that part. You're part of the smart money in the crypto. You know that. Now, just 2 minutes ago, it's all being updated here. This is now going to go back into the market. Everyone who bought back is going to sell. Why? Because they said the news, it kind of showed you the fact. Oh, see, it's going to be over now. It's a bull market. It's going to go into the skies. But remember, the whales, they trap the retail like this. It's our duty to understand that thing and stay out of it. So, if you receive value knowing the truth, keeping the emotions out, hit that like button. And if you want to make sure you get all of these charts at the right time to make the right decision, be a part of this. Use the link in the description below. I'll meet you guys on the next video. Bye for now.